Quickly get on board with our next guest of the show. We have Kranthi Bathini, equity strategist at Wealth Mill Securities, joining us. Kranthi, good morning. We are waking up to a somber morning once again. Israel has attacked Iran and a new war risk for the markets. How are you viewing these current developments?
Lovisha, good morning to you. The markets are again witnessing some kind of a correction because of the geopolitical escalation. Whenever the markets are going up, trying to sustain above the level of 25,300, that range, something unusual is happening on markets. Okay, it can be the domestic or it can be the external factors. Now it has come in the form of Israel attacking Iran, okay, which can be a larger geopolitical escalation, which going to have a greater impact on the entire equity markets. We are witnessing the complete correction across the globe. It can be the Asia Pacific pack, or yesterday we witnessed some kind of correction in European region. So overall, the sentiment is slightly a little bit sluggish at this point of time, and the geopolitical escalations are weighing on the markets at this point of time. The crude, which is crucial for the Indian market, which has been completely in favor of Indian markets from quite a long time, that has been creating some kind of extra pressure on Indian markets. Crude, if you see currently, it's up around 13%, which is quite unusual in the recent past. As and when the geopolitical escalations that escalates, the crude is going to give some tremors for the markets like India. But if I observe the charts and the details of the crude is concerned, crude oil is in a long-term bear market, which is a good news for the emerging markets like India, especially. But whenever these kind of geopolitical escalation that tend to escalate, it gives the wings to crude to fly. But we need to closely observe the crude oil prices next few days. If the crude is moving above $80 per barrel, that can create some kind of extra pressure on Indian markets, because one hand we are celebrating the low level of inflation recently, and RBI have taken very good measures, and they've given a bazooka and they've given a booster to the Indian markets, which is reducing the key interest rate parameters. But if the crude oil is going to escalate, that's going to create some kind of pressure on inflation, and even the monetary policy stance, which is accommodative, that can change in the next coming quarters. So crude is essential, and also fundamentally speaking, the domestic factor one need to track being the monsoon, which was, we had an early monsoon, but the progress of monsoon also extremely crucial. If any kind of delay or any kind of aberrations in the monsoon, that are also can create the pressure on Indian markets. By and large, the domestic markets are concerned at this point of time. We need to closely observe the crude oil movement and also the progress of monsoon at this point of time. Geopolitical worries, of course, it is beyond our control. We need to see how things are going to escalate in the next couple of weeks. That is extremely crucial. By and large, the domestic setup of the market, Indian market, is definitely, it is warranted by on any declines. That's what we witnessed in the past couple of years. Whenever there is a sharp decline on the Indian market because of any kind of these geopolitical escalations, those who bought at the paramount point of worries, whenever there is a fear in the worries, okay, definitely investors made good money when these escalations become normal over a period of time. It can take a couple of weeks or a couple of months also. But any decline on Indian market can be a very good opportunity. Whenever there is a extreme pessimism in the market, okay, that is the time one can do the cherry picking for medium to long term.
Okay, okay. Kranti, if any sustained rise in the crude oil prices, it could spoil the inflation math for India also. And now that we're seeing the early onset of monsoon, but the monsoon so far has been quite patchy. How much of an inflation impact are you seeing going ahead into this fiscal year? Because earlier we did see RBI reducing its FY26 inflation forecasts.
Yeah, definitely, Lovisha. These are the key important things which are going to have a major impact on the monetary policy and also on the inflation as a whole, which is in favor in the past coming weeks and months of the financial year is concerned. But slowly, if there is any, it is premature to say at this point of time because these are the early signs at this point of time. As you mentioned rightly, the monsoon has been patchy. We need to see a couple of weeks to get the assessment at this point of time. It's completely premature in terms of the crude is concerned. Also, at the same point of time, the progress of monsoon also definitely it's going to have any derailment in the monsoon as well as any escalation of crude oil prices to further. Okay, definitely it's going to have a impact on Indian market, but it is premature to determine the impact at this point of time. We need to see a couple of weeks whether the crude can sustain at this range or we can see some kind of a correction in the crude oil. We need to observe, and the monsoon also we need to take into cognizance after a couple of weeks later. At this point of time, one need to be a little bit cautious. These are the worrying factors which have been comfortable or in favor of Indian markets can turn as a negative side at this point of time. That's what we need to keep on our watch list at this point of time.
Okay. Kranti, 12% jump for the crude oil price. It's quite significant now that Israel has attacked Iran. A retaliation could be expected. What are the markets pricing in at this point of time? Do we expect a retaliation and the markets, have they priced in that risk premium at this point of time, or what are we anticipating?
Any kind of further escalation that is going to create some extra pressure on Indian markets. Okay, last time, 18 months back, when there was a geopolitical tensions between Israel and the Gaza, the entire issues, we witnessed the same kind of uptick in the crude oil prices. In fact, crude oil prices rallied around $90 to $100 per barrel, which created some kind of extra pressure on Indian markets. But market has been resilient that point of time. But this time it is a complete escalation with Iran, which have a prominence with respect to the crude oil prices and crude oil markets are concerned, crude oil production is concerned. Of course, India has been buying crude from the Israel in the past, and India has a good relationship with Israel, and we are making the payments to Israel in rupee terms, and the trade has been quite bilaterally quite strong between both the nations. So any kind of further escalation, it's going to have a domino effect on Indian markets, but it is completely premature to say how the things, because geopolitical escalations are completely out of the control. If we are expecting one thing, something the other way it's coming. So it is completely premature. It is the preliminary stage of these escalations. If they further escalate, definitely it's going to have some kind of a negative sentiment on Indian market in the medium to short term.
Okay, okay. How do you believe, investors should position themselves when it comes to crude sensitive plays? How do you expect that this decline is expected to, how can they play this decline at this point of time?
In terms of the oil marketing companies are concerned, which have been rallying in the recent past, in the Q1 of the year, they're going to face some kind of extra pressure. The remaining other paints and the other industrials are going to have some kind of a margin impact in the medium to short term. But how this crude oil entire saga is going to play out in the next couple of weeks, this is extremely crucial. One need to keep on their radar at this point of time. But by and large, the domestic consumption and the banking and financial services, the domestic centric sectors are concerned, they're quite favorable. If there is any dip in these stocks, and we have been quite bullish on your channel from quite a long time. We have been bullish on defense stocks, and the way defense stocks have rallied in the first quarter of the financial year, they are phenomenal. Any significant dip, if the market is witnessing with respect to defense stocks are concerned, they are completely domestic centric at this point of time. There is a clear cut order book visibility and earning visibility, but they have rallied very sharply in the recent past, and also they are at a fairly valued zone at this point of time on a longer term perspective. Any significant correction because of these kind of knee-jerk reactions, that can be one of the sector for the investors to cherry pick the stocks for a medium to longer term. Infrastructure and engineering also looks attractive for a medium to longer term perspective.
Okay, okay. Kranthi, now that the US-China trade deal is also out and the trade fears, war fears have also been a little easing on the tariff front, do you expect the flows to get diverted away from India and towards China?
For the long only funds are concerned, Lovisha, the emerging markets and the investors, the global investors' favorite destination is India till now. Okay, they're quite positive, but in the medium to short term is concerned, some kind of hot money can go to China, but there is some kind of a ambiguity for the investors with respect to the policy obscurity, policy transparency is concerned. But for the investors who are looking for the long only, for the long term, definitely India can attract the funds going ahead also. What we witnessed in the past 45 trading session, some kind of a strong buying that has came from the foreign portfolio investors. The narrative has been changing quite strongly. 3-4 months back, a quarter back, the US was the favorite destination for the investors across the globe, and there was a narration which went for short term. Let's sell emerging markets and buy China, and the narrative again quickly changed. Now the narrative a few days back was let's focus on the Indian markets. Okay, that's what the narrative. So there is a change of narrative in the medium to short term, but the long term narrative has been Indian markets, despite of the valuations concern some point of time whenever the market rises around 25,600, 700 levels of Nifty, some kind of ambiguity do come for the foreign investors in the medium to short term. But in terms of the long-term averages and policy continuity, what we are witnessing, and also the policy transparency and the way the growth has been taking place, the domestic consumption and growth is concerned, Indian markets remains the favorite for the foreign portfolio investors who are looking for long-term opportunities in India.
Okay, all right. All right, just one last question before we let you go, Kranthi. At this point of time, which sectors are you looking at in this decline? Anything that you are liking from this space, and of course, anything that you recommend investors to remain on the sidelines for the time being?
With respect to the Indian markets are concerned, Lovisha, any decline on Indian market, definitely it's a good opportunity for the investors. So banking and financial sector looks very attractive to me for a longer term perspective. IT valuations, with respect to the long term averages, if the investors have a longer term horizon, once the obscurity with respect to the US trade tariff and US budgets are concerned, once we get the clarity, okay, we can see some kind of a heightened activity in IT stocks for a medium to longer term, and the engineering and construction, real estate, domestic consumption looks very attractive to me on a medium to longer term perspective in the near term. Definitely one thing is, if the decline on Indian market further accentuates, one need to have a staggered approach, and one can buy at every decline.
All right, all right. With that, we have to let you go, Kranthi. Thank you so much for your time, and we hope that we connect with you soon.
Thank you, Lovisha. Always my pleasure to share my views with you.
All right. All right, let's take a quick check of the markets at this point of time. Well, Sensex is down about 900 points. Where we started off, it has seen a little bit of an ease. However, still trading with a cut of about 1% or so. Nifty once again below that 250 points, and of course below that 24,650 mark. If you look at the advanced decline ratio, definitely declines have taken an upper hand. India Wix up about 9%, and all of the sectoral indices are in the negative territory. But we are hoping that, towards the second half, we could see some recovery and we're off the day's lows. But until then, we'll watch out for all of the stocks in specific and all of them in today's trading session. But with that, we've come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.